Here is a perpetual inventory record example using the average costing or AVCO method. Kyle Fashions is going to have the following transactions related to their inventory item 153, navy blue pullover fleeces. They're going to begin the period with 2 units at a cost of $35 a unit. On August 5th, they make a purchase of 4 additional pullovers at $36 a unit. They sell 4 of their pullovers at a sales price of $70 a unit on August 15th. On August 26th, they purchase an additional 12 navy blue pullover fleeces at a unit cost of $38 a piece. And lastly, on August 31st, they sell 10 more of item number 153 at a sales price of $70 per unit. To figure out the amount of cost of goods sold, we're going to record on all sales, and the valuation of our inventory on hand that we're going to have to use for calculating our inventory for our financial statements. We're going to have to prepare a perpetual inventory record for item number 153, the navy blue pullover fleeces, using this time the AVCO method. So the first thing that we need to do is carry over any inventory that we had from the prior period. Well, what did we start with? We're going to start with 2 of these navy blue fleece pullovers with a unit cost of $35 a piece. Means our total inventory valuation for this particular item is going to be $70 coming into the period. On August 5th, we're going to make a purchase of 4 more units. Those units cost $36 a pop, meaning our total purchase cost was $144. Now we need to figure out the value of our inventory on hand. With the AVCO method, you don't need to layer your inventory like you did with FIFO or LIFO. Every time you make a purchase, you need to figure out what your new average cost basis is for any one item in your inventory. So we had 2 of these navy blue fleece pullovers before we made this purchase. We just bought 4 more, which means in total we have 2 plus 4 or 6 of these items. The cost of the inventory that we had beforehand was $70. We just spent an additional $144 buying 4 of these pullovers, which means our total cost is now going to be 70 plus 144 or 214. For the unit cost, how do you figure it out? Well, you just take, it's the average. You figure out the average the same way you always figure out the average. You take the total and you divide it by the quantity. So if you take $214 in total cost, divide it by the 6 units of inventory that we have, you get $35.67. So the average cost basis per pullover that you have is $35.67 at this point. On August 15th, we're going to make a sale, and we're selling 4 units at $70 a piece. Again, $70 is our sales price, but we need to figure out what our cost of goods sold that we're going to record on this transaction is. How many units are we selling? We're selling 4. And in the AVCO method, whenever you make a sale, you sell at your last known unit cost of your inventory on hand. For us, our last known unit cost was $35.67, which means when we record this transaction, the cost of goods sold on the sale of these 4 navy blue fleece pullovers is going to be 4 times $35.67 or $142.68. We had 6 pullovers in inventory. We just sold 4, which means what do we have left on hand after we make the sale? 2. The unit cost never changes on a sale using the AVCO method. It's still going to be $35.67. And 2 times $35.67 means that the valuation of these navy blue fleece pullovers is going to be $71.34. On August 26th, we're going to purchase an additional 12 units at $38 per pullover, which means the total cost of that purchase is going to be $456. We need to revalue our inventory on hand the same way we did on August 5th, and we start by taking the number of units that we had and adding to it the number of units that we purchased. We had 2 of these navy blue fleece pullovers. We bought 12 more. Now we're up to 14. The total cost that we were carrying these pullovers at before the purchase was $71.34. Well, we just added another $456 worth of cost from this last purchase. So if we add those 2 numbers together, The total cost of our inventory is now $527.34. To figure out our unit cost, we have to find out the average. So we take our total cost and divide it by our quantity on hand. $527.34 divided by 14 is going to give us a unit cost of $37.67. And on August 31st, we're going to sell 10 of these units. So our quantity sold is going to be 10. We always sell at last known unit cost. So when we record our cost of goods sold, we're going to record it at $37.67 per unit, which means the total cost of goods sold that we're going to record on the sale is $376.70. We had 14 of these pullovers. We just sold 10, which means we have 4 remaining on hand after the sale. Unit cost does not change on a sale in the AVCO method, so we're going to value these pullovers at $37.67 a piece, which means the total cost that we are carrying this particular item of inventory at after we made this last sale on the last day of the month is going to be 4 times $37.67, $150.68. To figure out our totals, again, sum up the quantity column. We purchased 16 pullovers during the period. The total cost of purchases during the period was $144 plus $456, or $600. Cost of goods sold, we sold 4 units on the 15th and 10 units on the 31st, which means we sold 14 units. Total cost of goods sold that we recorded on the 15th was $142.68. The total cost of goods sold we recorded on the 31st was $376.70. When we add those two together, we're going to have total COGS during the period of $519.38. What do we have left in inventory at period's end? We have just those 4 units with a cost basis of $150.68. To record our journal entries, we use our perpetual inventory record, as well as we know that we sold them at $70 per unit during the period, to account for each transaction that we had. So on August 5th, when we made this purchase of $144 worth of inventory, we're going to debit merchandise inventory and credit accounts payable for $144. On August 15th, when we sell, to record the sale, again, it's units sold times selling price or sales price. We sold 4 units. We sold them at $70 a piece, which means we're going to have a debit to accounts receivable for $280. We're going to record $280 worth of sales revenue by crediting that account. We're going to record the revenue with that entry. And to record the expense, it's always cost of goods sold over merchandise inventory for the total cost that is on your perpetual inventory record for that date. On August 15th, the total cost that we listed in our cost of goods sold section was $142.68, so that's how much we're going to record the journal entry for. Next up, on August 26th, we purchased $456 worth of inventory on account. We're going to record that by debiting merchandise inventory for $456 and crediting accounts payable for that same amount. On August 31st, we're going to make a sale of 10 pullovers at a sales price of $70 per unit, which means we're going to have to record $700 worth of revenue. We do that by debiting accounts receivable for $700 and crediting sales revenue for $700. And on that same date, we need to record the expense on the purchase, which is going to be cost of goods sold over merchandise inventory, for the total cost that we recorded in the cost of goods sold section for that August 31st transaction, which was $376.70. Using the AVCO method, Kylo Fashions would have a total of $980 in sales revenue that we see from our 2 journal entries. In our 2 journal entries, we recorded cost of goods sold of $142.68 on August 15th and $376.70 on August 31st. Our total cost of goods sold is $519.38 for the period, which means our gross profit would be our revenue of $980 minus our cost of goods sold of $519.38, or $460.62.